Yo, what's up, everybody? It is Tuesday, May 13th. We had a mixed day. NASDAQ up, S&P up, Dow is down. Inflation numbers came in today to CPI. But folks, inflation's going down. I mean, the core CPI was at 2.8%. And that is basically where that's like been the upper range of inflation for the last 30 years. All right, so it came all the way back down from the crazy numbers we saw during the pandemic. And so we're back down in a normal range. But the Fed still has the Fed funds rate, its policy rate at 4.25% to 4.5%. That, if you take out what was the high, like 5.5%, if you take that out, the Fed has the policy rate at the highest level in 18 years, since 2007. So I don't know what Powell is doing. To me, it's one of two things, maybe both things, actually. To me, it seems like he's just stubbornly going against Trump. Because Trump is, he's berating him publicly. These guys have egos. I'm sure Powell has an ego, and every time Trump beats him up, like he's digging in his heels. Or he's running cover for the hedge funds. Now, if you look at futures commitments, which I do every week, speculative funds, they are the most short. I think it's over a year, okay? They have a very, very large short position in the 10-year Treasury note futures contract. When Powell gets out, like he's going to go work for one of these hedge funds. I mean, 100%. Bernanke did. I mean, he's going to go for a high-paying position at one of these hedge funds. And for me, as a guy who's been in the business for a long time, I've been a member of 4 exchanges. I saw a lot of behind the scenes dealing and stuff like that. He's hooked in with these guys. I mean, I'm pretty sure of it. And that's one of the reasons he's keeping this hawkish stance, because all these other central banks, the major central banks, they're all cutting rates. Even Japan, Bank of Japan, which had been raising rates. And I said that was ridiculous, because when they started raising rates, what happened? Inflation started to go up. They stopped raising rates. So it's only the Fed who's sitting there, and they see the data. I mean, they get the data just like we do, and inflation's down basically to the range it was over the last 30 years. Maybe at the upper level of that range, but I mean, and you're keeping the Fed funds rate at an 18-year high. I mean, it just doesn't make any sense. So there's something going on there. There's definitely something going on there. Now, I thought I'd see from yesterday's big move in the stock market, I was pretty sure that I would see a big drop in open interest in the S&P futures, because I thought, man, that's all short covering. I mean, everybody who was short this market, and that announcement came out on Sunday about the tariff deal between China and the U.S., I was thinking, man, that's going to trigger a lot of short covering and a lot of margin calls. But when I checked open interest for yesterday's price action, open interest actually went up by 33,000. So that was new money coming into the futures market. Now, I don't know what happened today. I mean, today we were up, obviously, but they didn't publish the open interest numbers yet. But I would bet today that we saw a decline. If not, then that says something. I mean, new money is coming into the market, and if that's the case, it reflects a shift in attitudes by investors. Like, now they want to be bullish. The fiscal flows, like I told you yesterday, I've been tracking these for what looks to be, and again, it's too early to make the call, but it looks to be like a slowdown, not just in net government transfers, but in leading fiscal flows. But I need more data, because a lot of this stuff gets skewed by calendar issue. It's not exactly aligned year over day to day, year over year. So you need a little bit more data, but it wouldn't necessarily surprise me. I mean, although the only place that I'm really seeing any cuts, and I think I mentioned this yesterday, is in Department of Education. That's down 15 billion year over year. And that's going down by $1 billion a week. $1 billion a week. And the other area is interest income transfers, T-bill interest. But overall, interest income transfers they're up, but they're not accelerating anymore. And that's because T-bill interest income is falling. All right. All these things I said late last year that we were going to see. I talked about the drop in interest income transfers was going to slow down. I talked about, the slowdown in the growth in Social Security because of cost of living adjustments and stuff like that. All this stuff is happening. More fiscal drag from the IRS tax extensions, which effectively, like I said yesterday, you could look at those when when the tax extensions were granted. That fiscally is like a tax cut, but it was temporary. It was going to go away. So all this stuff that I told you was going to happen, it's been happening. Okay, but we got the Fed that decides to keep rates at an 18-year high when inflation has trended back down to basically its normal level that we have seen over the last 30 years. So, for everybody out there, I just want to make this comment because it cracks me up because I see a lot of, sometimes people comment, you got the bond trade wrong. For everybody who says the market sets the rate, the market doesn't set the rate. The Fed's sitting there at 4.25 to 4.5, and that's exactly where the 10-year has been bouncing around. And even though we've seen a very substantial decline in inflation in the data, and the Fed always says, well, we're data dependent, right? You see the data, it's going down. We're back to the inflation levels that we saw over the last 30 years. So why, if the market sets the rate, then we should have lower rates, but we don't because it's not the market that sets the rates. It's the Fed that sets the rates. And if the Fed says it's going to stay at 4.25 to 4.5 for the end of time, forever, then guess what? The 10-year is going to be stuck here at 4.25 to 4.5 forever. And then, I'm wrong. The bond trade is wrong. It's not going to work. See, I took them at their word, like they were going to react to the data. My forecast was right. All the things that I said inflation was going to come down. I said interest income transfers were going to come down. I said Social Security benefit growth was going to come down. I said fiscal drag was going to increase because of these tax extensions going on. All this stuff I said, and it all happened. But, Powell is the guy who runs the show. And if the Fed doesn't cut rates, then that's it. The bond trade is over. It's finished. So anyway, my portfolio hit a new all-time high for the year today on this bounce in the NASDAQ. I still think that, the thing that I'm focused on right now, and again, let me get back to this because everybody should have a process in the way they go about their investing or trading. I don't care if you're a technical trader. I don't care if you're a fundamental trader like me or somebody who, looking at the flows. One thing I learned over a long career of doing this is you have to have a process and you have to stick with it and be disciplined with it. And if you're a technical trader and your process is, when you get some technical signal, you follow that until that signal reverses or says, it's time to get out. If you're a fundamental trader, investor, then you look at the fundamentals and you don't look at price. You look at when the fundamentals are telling you that conditions are optimal to do whatever, such and such, to buy or to sell. And as long as those conditions are still in place, you have to follow your process. All right, so that's what I do. So for me, as I've said many, many times, like my process, my analytical process, the framework that I use is the fiscal flows, because I always say that's the first derivative of all economic activity, or that's the core driver of all economic activity. Everything flows off of that, including bank credit and all, and trade and all this other stuff. So I stick with that. And like I tell you guys every day, like I see the numbers every day. What I talked about yesterday was I don't concern myself with these headline, blitzes. Because I don't know if they're right or wrong. I don't know if Trump's going to change his mind the next day. I mean, I stay focused on the numbers, on the data. That tells me. I've used the analogy of, the mariner out on the open seas, or you're out there, in the wilderness with a compass, and you have to cite your location. You use, a map and a compass to find out where you're going. Mariner on the open seas, exactly. I mean, you need to look ahead, and you need to have a process to do that. So that's what I rely on. I don't jump around on the headlines. In fact, I saw an interesting, or a kind of a humorous article a couple of days ago, where somebody, and I forget who it was, but I think he was a well-known investor, a well-known trader, talked about the futility of headline trading, which is something I talk about all the time. Oh, by the way, I think I should mention this. Today, in a lot of stories online, they reported that April had the second largest federal budget surplus in history. Now, I told you guys 2 weeks ago about this huge budget surplus. And I said at the time that I thought Elon Musk was going to take credit for it because of Doge. All right. So far, I haven't heard him take any credit for it, but he's over there in Saudi Arabia with Trump. So I don't know. Maybe he will. We got to give him a little time. But I told you that was going to happen. But what makes me laugh about this is the way that it gets reported. And it gets reported like this is some great, fantastic thing. The federal government had the second largest April budget surplus in history. In actuality, the way it should be stated is the non-government transferred to the federal government the second most in history. In other words, the transfer from the non-government to the government's balance was the second largest for any April in history. That is a drain of the balances of us, the economy, our balances. So instead of stating it like that, which is, I think, the more correct way, because that impacts us directly. I mean, when you send your tax money to the government, it basically goes nowhere. It goes into a black hole, all right? It's just an accounting entry. It's a bookkeeping entry on their balance sheets. But for us, it's real. It is a drain of our balances. So instead of putting out this big headline, of course, nobody understands this. Nobody understands this. Nobody has any interest in understanding this. Instead of saying it was the second largest federal government budget surplus, April budget surplus in history, it was the second largest non-government transfer to the government in history, okay? The second largest from us to the government. It's just, our balances go down. Not hard to understand. Anyway, I guess that's it for today, folks. Please like and subscribe. Don't forget, go to my website, pitbulleconomics.com, and sign up for a 30-day free trial to MMT Trader. See you tomorrow. Bye.